Get ready, because the news cycle is moving at warp speed, and we've got the absolute latest updates that you cannot afford to miss. From incredible feats of engineering resilience to seismic shifts in the global automotive landscape, today's episode is packed with insights that will redefine what you thought was possible. We're diving deep into stories that are making waves, pushing boundaries, and shaping the future right before our eyes. Stick around, because you're about to get the inside scoop on developments that matter. Let's jump right in. First up, we've got a story that sounds like something out of a movie. A vehicle that faced nature's fury head-on and came out not just intact, but practically unscathed. We're talking about a direct encounter with the raw power of the elements, and the results are simply astonishing. This isn't just about a car, it's a testament to advanced design and protection. Then, we're shifting gears to the financial front, where a major player in the electric vehicle revolution is facing some significant headwinds. Their latest numbers are out, and they paint a picture of intense market pressures and a strategic pivot. This is crucial information for anyone watching the EV race and understanding the economic forces at play. Next, we're going to unpack the very forces that are challenging that industry giant. We'll explore the fierce competition, the price wars, and the strategies being deployed to navigate a rapidly evolving market. Get ready for a deep dive into the business battlefield, where innovation meets intense rivalry. And finally, we're looking at how one company's performance is being viewed through the lens of global expansion versus domestic challenges. Are international markets the key to overcoming internal pressures, or is the home turf still the ultimate battleground? We've got the analysis you need. Don't go anywhere. Make sure you're subscribed and the notification bell is on so you never miss a beat. Let's get into it. Nature's fury met its match. In a stunning display of automotive resilience, a BYD Song Plus electric vehicle recently weathered a truly extraordinary event, being struck by lightning not once, but twice, during a severe weather outbreak in Beihai, Guangxi, China. What's even more remarkable is that the vehicle, along with its driver, emerged from this double lightning strike with minimal impact, continuing to operate as if nothing had happened. The driver reported that the car's electrical systems, including essential functions like the windscreen wipers, remained fully operational throughout the ordeal, a testament to the robust engineering involved. Subsequent inspection by a mechanic revealed only minor cosmetic blemishes, specifically some scorch marks on the vehicle's roof. Crucially, the battery, motor, and all other electronic systems showed no detectable damage and continued to function perfectly. This incredible incident serves as a powerful real-world demonstration of the Faraday cage effect inherent in modern vehicles. The metal exterior of the car acted as a protective shell, channeling the immense electrical charge of the lightning strikes around the vehicle's occupants and interior, directing it safely to the ground. This principle, named after scientist Michael Faraday, is the same one that allows commercial aircraft to fly through thunderstorms without incident. The conductive metal frame of the car attracts the lightning, but instead of passing through to the occupants, the charge flows along the exterior surfaces to the ground, bypassing the interior entirely. It's important to note that the rubber tires, often mistakenly thought to offer protection, play no role in this process. It is the conductive body of the car itself that is key. This phenomenon was famously illustrated years ago when a car was subjected to massive electrical charges in a controlled test, with the vehicle remaining functional and its occupant unharmed. Experts consistently advise remaining inside a vehicle during a lightning storm, as exiting could inadvertently make a person a more attractive target for subsequent strikes. For the growing electric vehicle market, especially in regions with unpredictable weather like New Zealand, this incident offers significant reassurance. While manufacturers don't typically conduct specific lightning strike tests, the fundamental Faraday cage protection applies universally to all modern vehicles, irrespective of their powertrain. The BYD Song Plus incident reinforces the established safety principles, confirming that both electric and traditional vehicles provide a secure environment for their occupants when facing the unpredictable power of lightning. But can this incredible resilience hold up against the harsh realities of the market? We'll explore that next. Now, let's pivot from surviving nature's wrath to navigating the storm of economic competition. Financial storm on the horizon. BYD, a titan in the electric vehicle sector, has recently released its second quarter financial report for 2025, revealing a significant downturn that has caught the market by surprise. The company posted a 30% year-over-year decline in profit, a figure that not only fell short of analyst expectations, but also marked the first quarterly profit decrease since 2021. This dip underscores the intense competitive pressures currently gripping China's automotive market, particularly the ongoing price war that is reshaping the industry landscape. The report highlights that despite a notable 14% increase in revenue, reaching 201 billion yuan, the company's bottom line suffered. This revenue growth was largely attributed to stronger sales performance in overseas markets, suggesting a growing reliance on international demand to offset domestic challenges. In its mid-year filing, BYD itself acknowledged the challenging environment, noting that increased price competition and frequent occurrences of excessive marketing have exerted an adverse periodic impact on the development of the industry. This candid admission points to the aggressive tactics employed by automakers in China, where retail car prices have reportedly fallen by approximately 19% over the past 2 years, with average prices now around 165,000 yuan. Chinese regulators have also stepped in, warning manufacturers against engaging in unsustainable price cuts and pledging to penalize companies involved in unfair competition, signaling official concern over the industry's health. While BYD's first-half results still showed overall resilience, with net profit up nearly 14% and revenue up 23%, the Q2 results indicate emerging cracks in its previously dominant market position. Further evidence of this strain can be seen in the company's production figures, which fell for the second consecutive month in August. This marks the first time BYD has experienced consecutive monthly production contractions since 2020. Globally, production was down 3.78% year-on-year in August, following a 0.9% drop in July. The situation is more pronounced in China, where domestic sales, which constitute nearly 80% of BYD's total sales, slid 14.3% year-on-year in August, marking the fourth consecutive monthly decline. This slowdown at home is particularly concerning for the company's overall performance. Reports suggest BYD has begun adjusting its operations, including cutting shifts at some factories and postponing the addition of new production lines, indicating a recalibration after a period of rapid expansion. Analysts have also revised their forecasts downward, citing BYD's more cautious approach to inventory management. One area of positive development for BYD has been its strategic shift from plug-in hybrid vehicles, PHEVs, to fully electric vehicles, EVs, with EV production and sales consistently outpacing PHEVs since April. Moreover, global markets are increasingly crucial for BYD's growth, with the company expanding its presence in Europe and achieving significant sales increases in the region. However, this international growth has not entirely compensated for the domestic sales drag, leading analysts to emphasize that stabilizing sales in China remains paramount for the company to achieve its annual targets and maintain its global EV dominance. But how are these domestic pressures influencing the company's strategic decisions on the global stage? Let's dive deeper. Stay with us as we unpack the intricate dance between domestic market challenges and international expansion strategies. The price war's toll on BYD. BYD's shares experienced a significant downturn, plummeting nearly 8% on a Monday following the release of its quarterly financial results. This sharp decline highlights the market's reaction to the company's first profit decrease in over 3 years, a direct consequence of an aggressive price war intensifying within China's electric vehicle (EV) market. The April-June quarter saw BYD's net profit fall by 30% year-on-year, reaching 6.36 billion yuan, $891 million, according to LSEG data. This occurred even as revenue climbed 14% to 201 billion yuan, a growth primarily fueled by robust overseas sales. the company's mid-year filing openly addressed the market conditions, stating that increased price competition and frequent occurrences of excessive marketing have negatively impacted industry development. This statement reflects the fierce competition among automakers in China, where successive discount battles since early 2023 have driven down retail car prices by approximately 19% over the last 2 years, now averaging around 165,000 yuan, $22,900, according to Nomura citing Auto Home Research Institute data. Chinese regulators have also voiced concerns, warning manufacturers against excessive price cuts and vowing to punish companies engaging in unfair competition. This indicates a broader concern about the long-term health of the industry amidst these aggressive pricing strategies. While BYD's performance in the first half of the year showed overall resilience, with net profit up nearly 14% and revenue up 23%, the second quarter results signal potential vulnerabilities. A key indicator of this strain is the company's production output, which declined for the second consecutive month in August. This marks the first instance of consecutive monthly production contractions for BYD since 2020. Globally, BYD produced 353,090 EVs and plug-in hybrids in August, a 3.78% decrease from the previous year, following a 0.9% drop in July. The situation is more acute in China, BYD's primary market, where domestic sales fell 14.3% year-on-year in August to 292,813 vehicles, representing the fourth consecutive monthly decline. Given that domestic sales account for nearly 80% of BYD's total, this downturn poses a significant challenge to the company's overall performance. Reuters reported in June that BYD had started cutting shifts at some of its Chinese factories and had postponed the addition of new production lines, suggesting a strategic recalibration following years of rapid expansion. Analysts at China Merchants Bank International have consequently reduced their sales forecasts for BYD, citing the company's more cautious inventory approach. A notable positive trend for BYD has been its transition from plug-in hybrid vehicles, PHEVs, to fully electric vehicles, EVs, with EV production and sales consistently outpacing PHEVs since April. Furthermore, international markets are playing an increasingly vital role in BYD's growth strategy, evidenced by its expanding showroom presence across Europe and the rollout of competitively priced models. In July, BYD registered over 13,000 new vehicles in Europe, a substantial 225% increase from the previous year, according to the European Automobile Manufacturers Association. However, this overseas expansion has not fully compensated for the domestic sales slowdown. Analysts emphasize that China remains the core market for BYD, and stabilizing domestic sales is crucial for the company to meet its annual targets and sustain its global EV leadership ambitions. The profit drop is being interpreted by industry watchers as a critical juncture for BYD, forcing it to balance profitability with market share in a highly competitive landscape. So, how is this domestic struggle impacting BYD's global strategy? We'll explore that in the next segment. Now, let's delve into the critical question: can international markets truly offset the challenges faced on BYD's home turf? Global ambitions versus domestic realities. BYD's recent financial performance, particularly the 30% year-over-year profit decline in the second quarter of 2025, highlights a critical juncture for the electric vehicle giant. This downturn, the first since 2021, is largely attributed to the intensifying price war in China's domestic market, a situation that has seen carmakers slashing prices to capture market share in an increasingly saturated environment. While BYD's revenue saw a 14% increase to 201 billion yuan, driven significantly by stronger overseas sales, this growth has not fully mitigated the impact of domestic pressures. The company's mid-year filing acknowledged that increased price competition and frequent occurrences of excessive marketing have adversely affected industry development. This competitive landscape has led to a substantial drop in retail car prices in China, estimated at 19% over the past 2 years. Beijing has also intervened, warning manufacturers against unsustainable price cuts and threatening penalties for unfair competition, signaling regulatory concerns about the industry's health. Despite BYD's overall resilience in the first half of the year, with profit up nearly 14% and revenue up 23%, the Q2 results reveal emerging weaknesses. Production figures have also dipped, declining for the second consecutive month in August, the first such occurrence since 2020. Globally, BYD produced 353,090 vehicles in August, a 3.78% decrease year-on-year. The domestic market shows a more pronounced slowdown, with August sales falling 14.3% year-on-year to 292,813 vehicles, marking the fourth consecutive monthly decline. Given that domestic sales constitute nearly 80% of BYD's total, this trend is particularly concerning. Reports indicate that BYD has begun adjusting its operational tempo, including cutting shifts at some Chinese factories and postponing the addition of new production lines, reflecting a strategic recalibration after a period of aggressive expansion. Analysts have responded by lowering sales forecasts, citing BYD's more cautious inventory management. On a brighter note, BYD has successfully shifted its focus from plug-in hybrid vehicles, PHEVs, to fully electric vehicles, EVs, with EV production and sales consistently outperforming PHEVs since April. Crucially, international markets are becoming increasingly vital for BYD's growth narrative. The company has actively expanded its presence across Europe, launching models at competitive price points. In July alone, BYD registered over 13,000 new vehicles in Europe, a remarkable 225% increase from the previous year, according to the European Automobile Manufacturers Association. However, analysts stress that international expansion alone cannot fully offset the drag from the domestic market. China remains the foundational pillar of BYD's business, and stabilizing domestic sales is paramount for the company to achieve its ambitious annual targets and maintain its leadership in the global EV race. The recent profit decline is viewed by many as a critical turning point, forcing BYD to navigate the complex challenge of protecting profitability while simultaneously striving for global dominance in a fiercely competitive EV market. This complex interplay between domestic challenges and international growth sets the stage for our final update. And that brings us to the end of our deep dives for today, but we're not done yet. That was a whirlwind tour of the latest in innovation and industry shifts. We saw a BYD EV shrug off a double lightning strike, proving exceptional engineering resilience. Then, we dove into BYD's financial report, revealing a 30% profit drop amid China's intense EV price war. We unpacked how this domestic competition is impacting the company's strategy and explored the critical balance between overseas expansion and the challenges on home turf. What a ride! If you found this episode as electrifying as we did, hit that like button, subscribe to ElectroDrive News for more unmissable updates, and ring that notification bell so you're always the first to know. Drop a comment below with your thoughts on these stories, and make sure to follow us on all social platforms for behind-the-scenes action and bonus content. We'll see you in the next one.